So, yes, very good evening, everyone, and warm welcome to the very first. This year's, I think, yeah, this is our first Blue Bindi session for 2026. So, welcome. The start of the year, usually or naturally, all of us, we pause and we reflect, we think what we did wrong, what we did right last year. We make new resolutions, we plan for new goals, new plans, new intentions. We do a lot of, because Jan, I think all of us consider it as like a new clean slate. Whatever we did in the last year, whatever good we did, we continue, and whatever the new year resolutions that I'm talking about, whatever more new things that we want to add to our list, we start with that, and that's how all of us function. So yeah, but here's something interesting. While we were working and trying to understand what is it that our audience would want to know around tax planning, understanding tax better, we came across these things that nearly 70% of salaried individuals in India review their tax position only in the last quarter of the financial year, which we are currently in last because we've started the new year, but our financial year comes to an end on 31st March, and we start a new financial year from April. So what we've seen is that 70% of people actually sit and review their position in the last quarter, which is now JFM, January, Feb, and March. Over 50% rely entirely on Form 16. We just wait because salaried, your HR would be sending that out to you. So you just wait for that Form 16 to come into your emails, and that's how you understand what happened, where you paid, what taxes were applicable to you. Then a lot of us might not even be aware about this. A significant number of tax notices that get issued every year, they get missed, not because somebody did wrong or there were some gaps there, but it was just because you misinterpreted your incomes, you didn't do the calculation correctly, and those timing gaps actually cost you there. So that's what we understood. So we thought, why wait till March? Let's start talking about it right now. And I'm pretty sure all of you must have also received emails from HR to submit your investment proofs, all that you've done at the beginning of the year. You have to submit the proofs for that. Again, let's not wait till March. Let's close that in the month of Jan. And I'm very sure that today's session will give you a lot more insight and will make you prepared. And you're not going to sit, the last minute tax saving or last minute tax planning will not happen. You still have 2 months in hand. So let's focus, let's understand basics, and let's see what you can do better, because we don't want to make March as a panic point. It should just be a checkpoint for all of us that, yeah, this is what I was supposed to do, this is what I've done, and this is what my tax liability is all. So obviously, to start, we obviously for today's session we have Selesh with us, but before we get into the session, I would like Moin to be, just come again, confuse us with your questions. And I'm hoping this time you have a lot more options in your Q&A, so that, we can select better. I don't know why is there echo, sorry. Okay. So Moin, over to you.
Hi, Ritika. Thank you for that warm welcome. I am not here to convince everyone, but yes, I am here. I'm back again with some interesting questions. So, Ritika always, made it a point clear there should be options of all of the above, but that is not happening today as well. So, spoiler to give you the spoiler. But there's a little twist in today's session. There are right and wrong answers in today's session. So be prepared. We're going to test your tax knowledge today. And let's see how many of you all get it right. Okay.
You
Let's
made it difficult for all
begin
of us today.
with the first question.
Okay.
On your screens now.
Deducted correctly, do you still need to
Okay.
plan your
It's up
taxes?
there. Just give me a second. My laptop is lagging. I can see it. Okay, so the first one is, if TDS is deducted correctly, do you still need to plan your taxes? A, no TDS means tax liability is fully settled. B, yes, tax planning should be reviewed through the year. C, only in March while making tax saving investments. And D, only if you switch jobs during the year. So we'll give you all some time to think through, read the options again, and punch in the right answer, which according to you is the right answer. Okay. Read the questions, read the options carefully before you punch in. There are marks for each questions. Okay, there is no all of the above in this one.
No, but
Okay,
I just
I
wanted
have
to add
punched in
here.
my answer.
Am I not audible? Mohan, am I
Let's see
audible?
the answer now.
Not audible to him.
Okay.
Mohan, am I audible?
So 78% of you believe that yes, tax planning should be reviewed through the year. Okay, very interesting. Some of you believe that only in March, something not to be worried about through the year. Interesting mix of questions here. Many people feel that ठीक है, salary से tax कट गया तो काम हो गया, which is fair, ठीक है. But TDS is only an estimate and based on what you declared. So things change throughout the year. You get bonuses, you switch jobs, or you have some side income. So reviewing a tax position regularly just keeps you, prepared and not surprised. So I would say think of it like checking your bank balance. You do it quite often, right? Okay. On that note, let's have a look at the next one. Next question on your screen. Is it up on your screen? Yes, it is. Advance tax is usually paid as a single payment at the end of the financial year, every month along with salary, in quarterly installments during the financial year, and after filing the income tax return. Okay, let's have a look at the answer. I am thinking whether it is A or B or C or D. This is really confusing. Even I don't know the answer. Okay, let's the answer now. Okay, I've hit submit. I hope you've hit submit as well. Let's look at the response. Oh my God, 88% of you believe that in quarterly installments during the financial year. Some of you believe that, okay, after filing the income tax return, advance tax is usually paid then. Okay, most of you have got it right. C, 88% is the right answer. All right, moving forward to the third question of this session. Let's see what we got next for you. Which of these can increase your tax liability during the year? So is it receiving an annual bonus or a performance bonus? Is it switching jobs without consolidating total income? Earning freelance or side income in addition to salary? Or is it all of the above? Ritika's favorite option.
Yes, finally.
Okay, is it A, is it B, is it C, or is it D, all of the above? Punch in your answer. I have punched in mine. And I'm sure Ritika must get this one right. And let's have, we have 100% strike rate for this one. We have 100% of you who believe that D is the right answer. All of the above is the right answer. Very nice, very, very intelligent set of audience here with us today. All right, without wasting much time, let's move on to the next one. Okay, on your screens now. Loading. All right. Interest earned on savings account or fixed deposits is A, completely tax-free in all cases. B, taxable only when the money is withdrawn. C, taxable in the year it accrues or is credited. Or is it D, taxed only while filing returns in March? Okay, it's a little complicated, sounds a little technical, but give it thought. I think you'll crack this one as well. So interest earned on saving account or fixed deposit is completely tax-free in all cases, taxable only when money is withdrawn. taxable in the year it accrues or is credited, or is it the taxed only while filing returns in the month of March? Okay. I hope you all have done with some thinking. Let's punch in your answers. I've punched mine.
When I just wanted to add that
And
for people,
okay,
who are
so
confused,
63% of you have got it right. It is taxable in the year it accrues or
you
is
guys also not
credited.
able to hear me.
And don't worry, those who have selected B or D, which is taxable only when the money is withdrawn or taxed only while filing returns in March. Don't worry, the next 30-40 minutes, you'll have great time. Our expert will take you through all that is required to understand this tax, which is so taxing right now, and will give you a lot more clarity. Okay, with that, we come to an end of this session. Over to you, Ritika, and over to our expert. Thank you for joining.
Hi, Mohan, am I audible now? Because I was talking earlier and am I audible?
Yes, Ritika, you are audible.
Okay. Because I was
You
talking
can.
while Mohan was doing the poll and I think he couldn't hear me. And I
No, I
just
couldn't
kept
hear you at
talking.
all.
It's echoing. Okay, no problem. It's okay. So I was just adding to what Mohan, was taking the poll on that if the audience is not aware, if you didn't get the right answer, we will be discussing all of that in the session today. So, be there till the end. And if there's anything more that you want to know from our expert, you can put in the question in the chat. Okay, so Salish, hi. I hope I'm audible to you.
Yeah, hi Ritika. Hi everyone. Thank you for having me on this discussion. Happy New Year to all of you, and a
Thank
great
you,
topic
Salish.
as we
Yes,
enter the new year, and we get basically ready for the end of financial year.
yes, absolutely. So thank you once again, Salish, for joining us. So I think let's get started with the questions that Moin just asked. I'm pretty sure there are a lot of questions that each of us has in mind. So, Salish, let's start with the presentation and, just take us through and whatever, whoever gave the wrong answers, let's help them understand things better with this.
Right. So I will, move to the, first topic. So first, basically, why we are doing this session is, we are saying that don't have to wait till March, because, we often find people doing their tax planning in this last quarter, that is Jan, February, March. And, like Ritika, you mentioned, all those who are working would have got a mail from the accounts team or the HR team to submit the
Yeah.
investment proofs.
Mhm.
And that creates a lot of stress because there is a last date to give that, and accordingly your tax will be deducted. And if you fail to submit it, there is a chance that you might have to pay more tax.
Mm.
And therefore, we thought that, one is of course avoid, getting stressed. Second is that while you are doing tax planning, that is, investing for, in say PPF or a, ELSS scheme or something of that sort, or buying an insurance plan or a health insurance plan, you don't really, have to do this towards the end. You can do it during the year. Okay. And we also want to talk about something more important than the tax planning, is that, the incidence of tax or the liability on the tax, in the income that you earn. How
Mm.
does it get accrued over the year? Okay. Yeah. And we'll get to the, finer points as we go along. So I'll move to the, I think, Ritika, you will be able to change the slides or.
I I don't have the control. Who has the Salish, you have the control. At least I
Okay.
can see you. Huh.
So I will go to, I just mentioned why
Yeah.
this session we chose.
Mm.
And so for most people, tax planning is a, last quarter, the March end activity. And we are really saying that it is not the case. In fact, it is a full-time activity. It's a full year activity. And, basically whatever tax you pay is
Mm.
earned on the income that you have earned during the year.
Mm.
And, towards the March is only the final decision, how much final tax you have to, liable to pay for the entire year. Of course, you don't pay it in the month of March. It has to be paid while, during the year. And that is the most important thing. A lot of people miss on to it. And I think we will, as we go along, we talk about topics like TDS, advanced tax, self-assessment tax, filing of your income tax return. You will get a clarity on other more important aspects of tax planning.
Mhm.
So let me just come to the first part of it. So our financial year starts from 1st April and it gets over on the 31st March. And whatever income we earn during this particular period, the 365 days from 1st April to 365, all this income earned during this period has to be added, and you will say this is my gross total income. And the beauty of income tax is that you don't get taxed immediately. So if I get a salary today, obviously there's a TDS on it. But if I get an interest on bank fixed deposit, I may only be liable to pay, say, 10%, which is known as the tax deducted at source. Okay, so there is suppose I am liable to pay tax at the rate of 30%, but I am only paying what is getting deducted is only 10%. Okay, so while you are paying, you are earning income in full, the tax is gradually deducted from your, that process is little with a lag, or it's a little deferred in that sense. Okay, so basically, that is something that most people don't understand. People think that if they have seen a TDS, and I'll come to what is a tax deducted at source, I'm sure most of the people got the answer right. But whenever you earn income, there is some portion of the income is taken away at the source, and that is known as tax deducted at source. So does your job end with the TDS? No. If I was liable to pay, suppose I earn 100 rupees on an interest and I'm liable to pay 30 rupees on as a tax, the bank is going to take away 10 rupees on the spot. When they pay me the interest, they will pay me 10 rupees less. But I am supposed to pay total 30 rupees tax. And therefore, I still have a liability to pay the balance 20%. Okay. So when is the remaining 20% to be paid is also a planning that you need to do. Okay. So one planning is, of course, how to save tax. That is, you take benefit of Section 80C, put it into ELSS, PPF, and buy a life insurance plan, buy a health insurance plan. But there are other aspects that you need to take care of, and one of them is basically, are you paying your tax on your accrued income at the time that you're supposed to pay? Okay, so that is what when we are saying that you need to understand that your tax is a year-long process, and it's not a one-time event. It is not something that you will pay on the 31st of March. It is not something that you will pay only at the time of filing the return. Okay, in between, there is a period, we call this as advance tax, that is also has to be paid. That is the point that we are trying to make, and that also is a very important part of your tax planning. Okay, so let us first look at it. What are the different kind of incomes an individual can earn? Okay, so one is people like Ritika, you and me, and the other audience, if they are employed, they would be getting salary. So they will be getting salary. Some of them will be getting bonuses, perquisites. So all this is income from salary. Then if you have a property and you have let it out, you may be earning rent. So rental income is your income from house property. If you have sold shares, if you sold mutual funds, you've done any transaction in property and you made a profit out of it. Okay, it is known as a capital gain. And that capital gain also is taxable. Suppose you are into a business and profession and you have made some profits out of it, or you're in a profession and you gain some, made some money. We call it as
Mm.
gains. You know, that income again is taxable. So, and the final is that if something doesn't fall in one of the top four, then it falls into the last bucket, which is known as the income from other sources. Now, income from other sources basically includes all your interest income, whether it is interest on your bank fixed deposit, interest on corporate fixed deposit, interest on NCDs, any gifts that you received, everything is basically clubbed under income from other sources. So whenever you have any income, it
Mm.
will automatically fall into one of these buckets.
Nice.
Okay, so these are the 5 heads of income, where your income will go and sit. So what we do is we take total all the incomes of the year, and we are you able to hear me, Ritika?
Yes,
Yeah.
I can hear you.
Okay.
Mm.
Okay. So all the incomes for the year are added, and in all the income put together is known as gross total income. Okay, and when you calculate your tax liability, don't calculate it on the gross total income. You calculate it on the net taxable income. So how does the net taxable income come? You from gross income, you deduct certain deductions that are available to you. For
Mm.
example, we have heard of this very popular section called ATC. Okay, so all your ELSS, PPF, insurance is all clubbed under ATC. You minus what is there under ATC. ATD is the section which allows you deduction for the premium paid on health insurance. There's ATG, which is for donations you have made during the year. ATE is for interest paid on education loan. So all
Mm.
whatever you are eligible, you deduct that, and the net income is your net taxable income, and that is where your tax liability is calculated. So suppose you earn 1,000 rupees and your total deduction is 200 rupees. So your net taxable income is 800 rupees. But will you pay the entire 800 tax on the 800 rupees at the year end, or while you're filing the tax? Do you not do this calculation on while filing your return? This calculation again is an ongoing process. This is the major miss most people have. They think that they will sit down after the year is over, maybe between May, April, June, because the return has to be filed by 31st of July for all the salaried employees.
Mm.
And they think that they will sit back and do all this calculation before 31st July, and whatever income, total income on which the tax has to be paid will be paid. And that is not the case. Okay,
Mm.
there is something, which is known as advance tax, and there is something which is known as TDS, which is already adjusted. So you don't have to do, you are not supposed to pay all the tax at the end of the year or at the time of filing the return. That was the point I'm trying to make over here. Okay, so basically this is what I have already discussed. Okay, only when we I'll come to the section on TDS and all, so that will make it more clear for people. Any questions, anything you have, Ritika, at this moment, or anything in the
Nothing. I
audience?
am actually making notes of everything that you're saying. It is really interesting and something that I would also tell others also to write it. And if you have any doubt, you can ask the question, or at least make some notes to plan better.
Okay. So TDS is the most popular form of tax deduction at source. So when you earn any income from salary, so you will see that you don't get your, the salary that has been promised to you. You get
Yeah.
salary which is at a reduced level because the employer is supposed to deduct your tax on that salary. So if you are, say, earning something like a lakh of rupee as a salary, and you fall in the 20% tax bracket, the employer will pay you only 80,000 rupees. The 20,000 will go to the government. Okay. And this is the income tax mandate to the employer, that whenever you pay salary, you have to deduct tax at source. Now, in case of salary, the entire, whatever the liability is there, that is deducted at source. Okay. But when it comes to bank interest, like, or maybe interest on FDs, bonds, there is a TDS, which is at the rate of 10%. Okay. So suppose I earn 1 lakh rupees as an interest income. the bank will deduct 10,000 rupees and give me 90,000 rupees. But suppose I am, like I said earlier also, if I'm liable to pay 30% tax, then I am liable to pay total 30,000 rupees tax on 1 lakh rupees. But the bank has only deducted 10,000 rupees. The remaining 20,000 has to be paid by me. So your job as a citizen doesn't end that, okay, TDS has been deducted by the bank, I am not responsible for anything. Okay, same goes for your rent, same goes for your dividends. Okay, for dividends also there is a tax that is deducted at source. So that will be like something like a 10%. So you get say 10,000 rupees as dividend. You will get 10% less, 9,000 rupees. But if you are total tax liabilities, your taxes at 30%, then you'll have to pay the remaining 20% because the company has deducted only 10%. So this is where the challenge starts. A lot of people don't realize that there is a remaining tax on dividend to be paid. So when they sit and file their returns at the end of the year, what they figure out is that the total TDS that have got deducted is less than the total liability they should have paid. And in between that balance that had got missed is liable to interest because you are delayed. There is a penalty. Okay, the income tax payer has to pay this tax at some point in time, and that is reflected in the advance tax. Basically, when do you pay that 20%? That is an obvious question. 10 rupees has been taken away by the company or the bank. Okay, and you are liable to pay total 30 rupees as tax, then when do you pay the remaining 20% tax? That has to be paid every quarter. So suppose I get a dividend today. Okay, I get 1 lakh rupees as dividend today. Okay, we are on the 19th of January 2026. Okay, the company would have deducted 10% as a TDS, and I have got 90,000 in hand. But actually, I am supposed to pay additional 20,000 rupees tax because I am liable to pay tax at the rate of 30% because that is the slab rate in which I fall. So when will I pay that 20,000 rupees? I will pay that by 15th March because we are in the Jan-Feb-March quarter. I will pay that remaining 20,000 by 15th March. Okay. Suppose I had got this dividend on 31st of December because it falls after 15 December. I'll still pay that. So from anything from 16 December till 15 March is what I will pay in before the 15th of March. That is the way income tax works. So again, to repeat, I got 1 lakh rupees dividend. I am liable to pay 30,000 rupees tax. The company has deducted 10,000 rupees. I am liable to pay 20,000. The remaining 20,000 has to be paid before 15th of March. Now the question is, if I delay, if I don't pay, then what happens? Okay, I forget. I don't pay that tax. I did not anticipate this dividend is going to come. Now, I will sit back and say, okay, when I do my return filing in July, I realize, oh, this 20,000 I have not paid. So how much time has gone? April, May, June, July, 4 months have gone. So the income tax will levy penalty in the form of interest for the 4 months on 20,000 rupees. Okay, which I was supposed to pay and I have not paid. Now we all know that the government also needs funds to run the country. Okay, and therefore they have to deduct tax at source to collect some money to run the country. And also they know that people are earning the income and they've given you a quarterly reset in that sense. They say that, okay, whatever you earn between April, May, June, suppose you earn rental income, you earn interest income, you earn dividend income and salary income. So they know that for April, May, June salary, your employer has paid the tax because he is liable to pay. He cannot shun his responsibility. But whatever is being payable by you, you are supposed to pay that by the advance tax date. So April, May, June, you will have to pay for before 15th of June from anything from I think someone has got unmuted.
Yeah.
So, Sailesh, one thing here, like the way you said, if I receive the dividend, the income in December, okay, so I'm supposed to do the payment by March. So, if I don't do that, and I do it obviously now when I'm filing the returns, so the interest is from April it gets calculated, or from the time so it will be in April,
16th
May,
March.
16th March
Because
onwards.
you are supposed to pay by
So you
15th
give in
March.
that, हाँ. So it is not that कि December आया आपने जान से कर दिया वैसे नहीं. So you
नहीं,
were
जिस
given the
quarter
window
में
to
आपका
pay.
आता है.
Okay.
So you have got, so now, there's a very practical question a lot of people ask. Suppose on the 14th of December, on 15th of December, I get after I
Dividend
paid my
something.
tax and I get some
Hmm.
dividend.
Hmm.
Okay. Now what happens? Okay. So income tax says that you have to estimate how much dividend you'll get. It is not on actual. So suppose I know that, every year by the pattern from the portfolio I hold, suppose I know that in the March quarter, okay, Jan, Feb, March, I get 2 lakh rupees as dividend. Okay. Then I should estimate that, okay, this year also I may get 2 lakh rupees as dividend. On that 2 lakh rupees, I have to pay 30% tax. So I should file my advance tax for 60,000 rupees. Okay. Now it may happen that I may get 70,000 rupees. So I've paid 10,000 rupees, on the
Less.
10th, on that, I have not paid the tax. So I'll be charged a penalty. So it is important that as soon as you realize this, you go and pay the remaining tax. So suppose you came to know on 16th March and you know that's a big sizable amount, you have to pay it by 31st March. So that to avoid the interest on that. Okay. So that is the basically. So a lot of people ask, अरे मुझे तो पता ही नहीं मेरा income कितना होगा साल में. So how do you expect me? So they say that either you go by the past track record, or you estimate that this is the likely income I'm going to get. So if you have leased your property on rent, okay, then you know that is the total interest that I will get on, total rental you will get on your property. Okay, that is anyways known to you. So suppose I am going to get 10,000 rupees rent every month, I will get 1,20,000 divided by 4 quarter, I'll pay 30,000 rupees. So I know that my income over and above my salary is going to be 30,000 rupees for that quarter. So that is how I have to estimate. Similarly, I have to do this calculation for my bank deposit, for NCD payouts or any other, dividend. Some of it could be, easily calculated. Some of it could be based on the past trend. The best thing is to pay tax on slightly higher amount.
You get
Okay,
it
not-
in return while you're filing.
You
You
will,
will get
yeah,
the
if you
money.
paid excess, you file a return, you might get a refund. But it is better than paying interest.
Correct.
That is the point. Okay. So this is the most important thing. A lot of people don't pay, and I've seen people paying thousands of rupees in interest just for the delay, something that they should have done, by 15 June, 15 September, 15 December, and 15th March. They forget. And even if they have done proper tax planning and they bought the best insurance scheme and they've invested in the best mutual fund for tax saving, because they have missed out on advance tax payments, they may be liable to pay higher. They may have to pay penal interest on that. Okay. Now coming to the third liability and something that gets missed is the self-assessment tax. So what is the self-assessment tax? This is, when you will sit back and file your return, you will say, okay, I have earned income from salary, dividend, rental income, all of that. I'll do a gross total income and I'll calculate my net taxable income. From a net taxable income, I will deduct the TDS that the company, bank, my employer already paid. And I will also deduct the advance tax I have paid. So whatever I estimated, I paid my own advance tax. And if there's something still pending, okay, that is known as the self-assessment tax, which I will come to know only when I'm filing the return.
My returns.
Yeah, not, uh, on that amount that you're paying, will there be interest? Of course, it will be, because you have you're paying self-assessment tax for the balance tax payable by which should have been paid by 31st December, 31st March. You forgot to pay it. Hence, you will have to pay the interest from, March, April, May, June till the time you're filing your return. So this is the TDS, advance tax, and self-assessment tax. So this is also part of your, tax planning, because a lot of people forget about it. And I think a lot of people might get overwhelmed by this. So it is always I suggest that get a tax advisor or a help of a chartered accountant to, if you're finding it too technical or, struggling with this, better to pay that fee and avoid all the hassles.
Correct. We've included an example also.
Yes, I have. I'll just coming to that. So over here, we are saying that if your total tax liability is 1,50,000 and your TDS was 90,000 and you paid advance tax of 40,000, so you're still paying 20,000 is just self-assessment tax. So while you're filing a return, you will be getting a message that 20,000 is payable by you. Okay, and there will be a button to click pay here. You pay here, it takes you to the income tax website, and the income tax website will take you to your bank website, and the money will be deducted from your bank, and a challan will be generated showing that total 20,000 rupees tax has been paid. Okay. Now, where does all the proof of all this sit? Now, you may say that, okay, I have 100 companies which paid me dividend. I've got 15 fixed deposit that paid me interest. Where do I check? Where is the record of all this? Because, every company is supposed to give you a TDS certificate. Your employer is also supposed to deduct tax. So where do I go and check all this? All this information is available on your income tax portal. You have to look for something which is known as Form 26AS. Okay. Form 26AS is basically a complete record of your TDS, your advance tax payment, everything is recorded there. And when you're filing a return, you need to tally with that. Okay, if there is any discrepancy, you need to know. So even when you are, occasionally you should keep checking your 26AS also. So suppose we are in the ninth month of this year. Your salary has TDS has been deducted. You may have earned dividends and all. You should go to the income tax portal, log in, check your 26AS. It may not be immediately updated till yesterday, but at least a month back, it could be updated, and you should check whether everything has been, is reflecting over there or not. Suppose you paid advance tax in the month of June, September, and December. Is it reflecting in the 26AS? If it is not, then you still have time to correct all the discrepancy. It should not happen on the 31st of July. You're sitting and filing a return and you come across a discrepancy and says 1 lakh advance tax is not reflecting over there. That time you'll have to pay the balance tax and then take the matter with the income tax department to say that 1 lakh I have paid and it's not reflecting. So again, these are some of the things we thought that practical difficulties that you could face if you're not, keeping a track of all your taxation.
This one I was not aware. I always thought my CA or somebody would tell me, but if I could also go and check and, I can get an idea, like the way you said, these are the 4 dates that I need to keep in mind to pay advance tax. And if somebody tells me this is the amount, because salary and all, the dividends and all, as you were talking, I was also thinking I would also not know when what is coming into the account. But if it is there, then at least this much I can do by going to the portal and, checking and then doing the advance payment. Made a note. Guys, you also make a note. Form 26AS. You can find it on the income tax portal.
Okay. Now coming to the next important, thing that a lot of people miss out is that, certain events that occur that can change your tax mid-year. Okay. Meaning that you have not budgeted in your mind that this is going to be my total income. and suddenly you make some income and you forget to take that into account as far as advance tax is concerned, or as a part of your total tax income. So basically, if you have got a bonus, okay, or any performance fee, performance bonus, or any variable pay, then of course your employer is going to deduct the tax, so you don't have to worry about it. But it is important that you keep a track that this is the additional income that you made over here.
Yeah.
Okay. See, what happens is the employer only knows about your salary income. Okay, they don't know about your capital gain, interest income, dividends, and all. Okay. So you have to be, the total income you earn is known by you only. That is where the gap also comes in. Then if you have made a job switch and you got a hike, you got into a higher paying job. So you need to basically also know that your tax liability is going to go up, and therefore your advanced tax calculations are going to go up. Suppose you made some side income. You went for some lectures to a college. You took up some business profession. You did some consulting and you got a freelance income. Again, don't forget to include that. See, what happens is a lot of people think that the income tax doesn't know all this. If the payment has been made by check, the other person would have deducted a TDS on that, then that income, the income tax knows. And if you don't show it into the income tax return, then a return is going to be considered as a defective return. So if even if it slips your mind, the problem is that, you will be held accountable. You can't take the excuse and say, okay, I forgot and I did not pay the tax. Okay, now, again, interest income we have already discussed. So these are some of the important incomes that can change your tax liability, which you may not have accounted for.
Correct.
There is also on the income tax portal, when you are filing a return, there is an annual information statement, AIS. Okay, it is a complete record of all the incomes and transactions you have done. Okay, so suppose you bought mutual funds worth 50,000 rupees. It will show that these are the purchases in mutual fund. Now on purchase of mutual fund, you don't have to pay any tax.
Correct. If you sell, huh?
Yeah, but the income tax is telling you that we know that you bought 50,000 rupees of a mutual fund. Suppose you sold 60,000 worth of mutual funds. That will also be reflected. Now, obviously the income tax is saying that you have sold mutual funds worth 60,000. Okay. And if you have done, say, 5 transactions like this, 60,000, 70,000, 80,000, 90,000, 1 lakh rupees, then while you are filling your capital gain schedule or this column in your income tax return, all 5 have to get reflected over there. You may forget, but the income tax is having a record. So income tax says, see, we know that you sold 5 mutual funds. You did 5 transactions rather, but you have declared only 4. So there is a mismatch. And if you say no, one extra transaction is not my transaction, somebody else's, that onus is on you to prove. So income tax is not saying that our data is accurate, but they are saying that this is what data we have. Now, again, along with 26AS, you also have to look at AIS. And whenever you're filing your returns, okay, look at the data that the income tax department has and look at the total data that you have. And if you have any liability, any mismatch, then see that you forgot or something has skipped your attention. Okay, so that is how it should be.
You're going back, Adi.
Oh, sorry, I'll go forward. So those were the things that people normally it slips because we are so busy with our work. We don't keep a track of what is interest, what is TDS, whether I missed my advance tax date, and also certain incomes. suppose I've done many transactions in stocks and mutual funds, you have got the, and of course, if you have got stocks, you're doing multiple trading and all, then your broker will give you the data. Today, mutual fund data is also available on the RTA, like CAMS and Carvi. So they also give you all the information over there. But again, tally it with the AIS, the annual information statement report. Yeah. So common mistakes, just to summarize some of the, I've already spoken about over here. So, if you're assuming that TDS cut gaya, so I don't have any liability. Okay. Your employer has paid the salary, TDS on the salary, and your bank has deducted the TDS, your company has deducted TDS, but that doesn't mean that the entire tax has been paid. Okay, you still have a liability on your hand and you have to pay it before the next advance tax date. Okay. Not revisiting your tax regime or declarations. So today we have the old and new regime. I'm sure everybody knows about it. The new regime is looking more attractive in that sense, from tax saving point of view. But whether you should be under the new regime or the old regime is depends upon you calculating the tax under both the options and seeing whichever regime your tax liability is the low, you can choose that. But you need to do that exercise. Okay, and if you're a salaried employee, you need to tell your employer in advance. Okay, ignoring previous employer's income. So if you've switched job and suppose after 9 months of working somewhere and in Jan you joined somewhere, that Jan, Feb, March is not the only income. So you have to club all your total income for the 12 months and show that. Trading capital gain as a March problem, no. Capital gain is not, like I said, there is nothing which can be left till the March. Everything has to be left till the next advance tax date, because that is the date by which it is mandated by, whatever tax you are supposed to pay by then. And if you don't know how much tax it will be, it is better to make provision and pay the tax that you think is going to be the best case. You think that this is the X amount of income I'm going to make in this quarter, pay tax on that. Common mistakes, often missed, incorrect rental income treatment. Again, ensure that, like I said, income tax department knows all this. If the rent is coming by check directly in hitting your bank through UPI, all this data is going to be available in the AIS. You cannot miss it. Misunderstanding the holding period. This is applicable in the case of capital gains. So for example, when I sell shares after 12 months, my holding period for shares is known as the long-term capital gain. If I make any money on it, if I sell within 12 months, it is a short-term. So, you have to understand how these holding periods work, and that is where, if it is very technical, take help of a chartered accountant or a tax advisor. Not planning capital loss set off. Yes, if you made a profit in somewhere and you have made a loss, it can be set off subject to certain conditions. It's not that every gain can be set off against every loss. There are certain rules subject to which this set off is allowed. So you need to take advantage of it, but also not ensure that you're not taking the wrong advantage, because it will push up your tax liability. Assuming gifts are always tax free. No, if someone gifted you money, anything, which comes as a transfer of a capital asset, someone transferred some shares to you or dividend or some bank FDs to you, then, those gifts can be taxable. Okay. And,
So
please
even from
ensure.
sellers, even from parents, if we get gifts
No,
from
there are
parents, cash.
exemptions. Yeah, there are exemptions as far as gifts are concerned. So gift from parents, all blood relations. So there are technical definitions for all this. So you
Okay.
have to be very sure that whatever you're getting, okay, through the bank route, everything is reported, and you are supposed to make proper disclosure and comply with the taxation. Yeah. And like I said, no, not checking Form 26 AS and AIS. These are very important documents. You don't have to look at 26 AS while filing the return. While most of us will do that, I'm sure, filing the return. And most of us, I'm sure, wait till the deadline, till 31st July, and and hope and pray, and the last day
It
the
get,
government
people
extends.
pray it should get
Yeah,
extended.
yeah. So it doesn't happen these days. So keep checking your 26 AIs, keep checking your AIs, look for discrepancy. If there is any discrepancy, report it to the income tax authorities, get that sorted, because ultimately the return which you will file has to tally with AIS and 26 AS. In case there is any discrepancy, you will be they will take that some income has got missed out of it, it will be added and they'll ask you to pay the additional tax. So demand notice will be sent to you. That should not be the case. Yeah, Ritika. Coming to, I think this is the last part of the discussion, how to plan your, rest of the year. So, okay, need to keep a track of all your transactions, financial transaction, income changes, one-time receipts. Uh, I'll give you some practical instances. Some companies, go for merger demergers. Okay,
Mm,
say a division gets demerged from a company, and there are certain payments made by the company that becomes like a deemed dividend. Now these are one-time, income. You may not be getting this every year, and it's quite possible that it may slip your attention. And on that,
mm,
you're supposed to declare that as a dividend income and pay it in your, while filing your return. But again,
mm,
you are supposed to keep track of these, because companies do a lot of corporate actions during the year,
mm,
and this gets reflected in 26 years. And if it has missed your attention, and you come to know only during the
filing.
filing of return, you will be liable to pay tax. Sorry,
Mm,
you will be liable to pay the penalty interest
mm,
on the amount that you have not paid. So keep track of that one-time receipts. Okay, and when to act. Like I said, every month, every time you earn an income, the tax liability accrues. You sell a share, you make a profit, the tax liability accrues. So today, if I sold some shares and on which I made profit, the tax accrues today.
mm,
And if I have got an interest payment date from the bank, suppose I get the interest payment today in my bank, the bank would
mm,
have deducted at TDS. The remaining balance that I have to pay has to be paid by 15th March. But I should be aware. I can't wait till, till I file my return or till the year gets over. When we say not in
mm,
March, doesn't it means that by 31st of March? It's not the case. Everything has to be done before the advance tax date.
mm. Very, I mean, these certain things were there, but we were not even aware that needs to be done. And these things, like the form and the statement that you referred to, it's out there. No, somebody is actually collating and keeping. You just have to go and view it and pay your advance tax and avoid that penalty interest that comes on you. But yeah, we don't do this. Most of us don't do this.
Yes, and I know a lot of people, get bogged down by the technicalities. But
Yeah.
believe me, if you sit there, if you're not in a rush,
Mm,
and and if you're not stressed about the whole thing, you sit with a cool mind, you will understand all this. This is not a rocket
mm,
science. This is very
mm,
simple. Today it is very simple to pay your advance tax. Even your banks, when you log into your bank account through
mm,
net banking, you can pay your advance tax. Everything is very, very seamless. The moment you
mm,
pay your advance tax, it gets reflected into your bank account, of course, but also in the 26 AS. So the
mm.
complete record of your transaction. All you need to do is to act on time.
Yeah, yeah. It's just the time, and it's your money again. I mean, we're talking about money. We're telling you to grow your money. So, this is, I've heard this multiple times. Penny saved is penny earned,
Correct.
right? So, वो पैसा बचा वो भी कमाया ही है सोचो फिर तो You will make sure कि नहीं भी समझ आ रहा है सीए को पकड़ के या किसी फ्रेंड को पकड़ के बैठे और ये समझे. So
Right,
yes.
right.
Okay,
So,
so I think we will get people. Yes, we have that piece only, Sailesh.
questions? Yeah, we
Let's
have the
get,
question.
yeah. Do we already have some in the chat? I don't. Do we have? So, Sailesh, we have the first question, which is interest from savings accounts and FD fully taxed or something? TC like us, T6 लिखा है, तो I'm assuming she wants to say taxable. Okay.
It is taxable. Everything, all your interest income. There is a one fine distinction, and it is technical now. If you have got interest on savings account, okay, the bank account that we have, it pays you interest every quarter. That is, tax free up to 10,000 rupees. Okay,
Okay.
so section TTA is a deduction which is available. Now, for people who are under the new regime, this is all not available.
Oh.
So, okay, so if you've got interest income coming from there up to 10,000, it is exempt. For senior citizen, it is section TTB. Okay, and for them, the total deduction is 50,000 rupees.
Okay. So they can earn this much interest. 10,000 मिले तो आपको टैक्स नहीं देना है. उससे ऊपर गया उसी अमाउंट पे आप टैक्स भरोगे as per your bracket, and same thing for senior citizens also. Okay.
Right.
Okay, interesting. So yes, if Ruchi, so far you've kept your amount in savings account and FDs, withdraw करोगे पैसा लगेगा, तो इससे better कहीं अच्छे से invest करो. Okay. If I have salary and I also have some freelance income, how should I plan my advance tax?
So you will know what is your total income. If you're doing a freelance, suppose you're in Jan, Feb, March now, you will know what is your Jan, Feb salary, March salary. You'll also know what is your freelance income. So suppose you don't get the income by 15th of March. So, but you know exactly that how much is going to be your total tax liability for the quarter. So if you are sure that, by before 15th of March, you will get to know the Jan and Feb ka income, at least the inland freelance income as well as the salary income. March, you will know already in advance, this is what my likely salary is going to be for March, and you can estimate that in your total income. And if you know that you have certain assignments and this is likely to be a freelance amount, you should make an estimate of it, club it together and pay that total, advance tax by the 15th of March.
Yeah. So that's how you're supposed to plan and clear. Otherwise, the freelance income, the additional income that you're getting, you will be paying tax, obviously, and interest on that. So calculate better and pay advance tax. How often should I review my tax situation during the year? Depends.
So it depends how frequently, if you have a very, regular income, say you have a set pattern in that sense. You got salary income and you know your bank FDs, and you have your dividend income, and there's a trend which is there. So you know that this is how much I earn every year, and you will be able to keep a track of it. So review it quarterly, at least once in a quarter, to understand, where you are and if there is any course correction required.
And I think the dates that you mentioned, no, Sailesh, quarterly भी वो quarter 15th के पहले कर लें, तो you will get a sense कि additional हो गया ये हो गया, तो advance tax pay कर दो और save yourself from the interest.
Correct.
So when do capital gains trigger advance tax? I'm
like I said, suppose I have bought a share for 1 lakh rupee. Okay, say I bought it 5 years ago, 10 years ago, 20 years ago for 1 lakh rupees. Today I sold it for 5 lakh rupees. So my capital gain is 4 lakh rupees. Okay. and suppose it's a stock, and on that I will pay 12.5% tax. So 4 lakh into 12.5% becomes 10,000 rupees as a tax. Okay, that 10,000 I have to pay by 15th of March
Correct.
because it is accrued in this quarter.
Quarter. Okay. So that's how you
Sorry, I think 12.5 was one,
अंदर से
whatever. I
ज्यादा कम हो
think,
गए हाँ
yeah, so that is how it is.
so just calculate the percentage but make sure when capital gain मतलब आपने वो बेच दिया है आप देख लोगे calculate करके in the percentage is clear no उसका तो fixed ही होता है ना and then you pay
So,
on
yeah,
that.
yeah. So it depends. Now, technicalities will be there if you sold listed share, unlisted share, depending on what you sold. Like I gave
Okay.
you an example of basically, a listed share. You bought a listed share and you make, a profit on it. You have to pay 12.5% as a capital gain. Suppose it is, so the tax liability on, the 4 lakh rupees will be 50,000 rupees, and you have to pay that 50,000 to the government by the 15th of March.
Yeah, so keep a track of that. And as you were mentioning earlier, also, Sailesh, if you don't understand it better, consult your chartered accountant, people around you who know it, so that you understand and don't are not ending up paying more interest. Then are gifts always tax free? Which gifts? If it's tangible gift, then they are tax free.
So gifts are not always tax free depending upon who is giving to whom.
Yeah.
Okay. So, whenever you're doing this, you should check with your tax advisor. And if you don't have one, obviously you have to engage one because, there are a lot of conditions attached and you will have to be very, very sure. Because, I can't give you any tax advice on this platform. But I can only say that yes, not all gifts are tax free. There are certain exemptions that are available subject to certain conditions. But yes, you need to check before giving the gift or receiving the gift, either case.
Oh yes, giving and receiving, correct, both. The last question that I see in the chat, what is tax rate on capital gains on gold ETFs, both ST and LT, short term and long term?
So long term is 12.5. So ETFs are listed, so you're liable to pay tax at the rate of 12.5%. And if you sell it within within 12 months, then you will have to pay as per the slabs, as per the slab rate. It's not basically the 20%. That is only for listed equity. So a lot of people confuse it that short term अगर तो 20% लगेगा, ऐसा नहीं है. Short term अगर तो as per the slab है.
Okay, so as per your slab उतना लगेगा and अगर long term है तो it is only 12.5 as ETFs are also listed. That's how. Okay. I think yeah, we don't have any more questions. Guys, if there's anything you guys can put it in the chat. And I'm hoping a lot of y'all made notes today. At least I did. I have a lot of homework to do. I'm actually going to go and check my Form 26 AS and AIS today. And obviously now it's March that I have in hand. So yeah, duration of long term. Okay, there's something Abhishek wants to know, but I didn't understand his question. Okay, so if you guys have any more questions, anything that you want to know, please write in. We will be happy to assist you. But as Sailesh mentioned multiple times, go through these statement forms that are available. Consult people around you, speak with your CA, and don't wait till the end of March to do, the planning to submit your proofs and to, actually save or rather pay your advance tax. Calculate it well in advance. And today, whatever Sailesh spoke about, if there's anything more you want to know, please connect with us. Sailesh, thank you. Thank you for, tax as a word only, I think everybody thinks up to paise gaye. So thank you for simplifying these terms for us today. And I'm hoping all of us made notes and you're going to be more careful and you're going to do your do your advanced tax payments and make sure that towards the no we filed the returns in the month of July, we're not paying a lot more interest. Hope this tax planning session is helpful for all of us. Shailesh, thank you once again.
Thank you and wish you all the best. Take care.
Thank you. Thank you everyone for joining us today. We'll see you next time. Thank you. Bye-bye.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.